Hi everyone, this is Craig, the options linebacker. This is the weekend report for Sunday, March 14th. The question we're always trying to get an answer to is, what is the market likely to do this week? Something that we like to look at as we enter the week to help us answer that question is, what are the economic announcements that are crossing the wire this week? And which are the big ones that could help really push the price in one direction or another? And the biggest one that we have this week is the FOMC meeting announcement. For years this has been a definite market mover, although the past couple of events have been noticeably dull because really the Fed doesn't hold any more bullets. But as we get into an era of potentially interest rate tightening, that could change as we go forward. The other thing to notice is that this is quadruple witching OPEX week, so we'll see a lot of volatility through the week and probably a fairly quiet day by Friday, as most positions have been squared up by then. So we'll start out looking at the market with the Russell 2000, or the small cap index. And one of the things that we can notice about this on the monthly chart is, first of all, so far the price is above the 61.8% retracement of this whole bear market. So what that means is that if the month is able to close above that 61.8% retracement level, which is around 660 on the Russell, then the probabilities have improved for the entire triangle to be filled up. So in other words, as we get above the 61.8% retracement, we might see a continued move up to around the 850 level. If not, if the prices are unable to punch through there by the end of the month, then we may see some consolidation before the next attack on that level is made. Now, one of the things that we noticed a couple of months ago, and this is particularly obvious on the weekly chart, is this heavy level of resistance that was formed in 2008, which was support at the time, and old support becomes new resistance. Now, what we talked about a couple of months ago was that this is probably good for the first test of that level. It's probably not going to break through on that first test of that level, but the second test of that level, all bets are off, and that's exactly what has happened, is that due to the number of short holders above this level, this has turned into a massive short squeeze above 650. So this is a great example of when not to go to the well too often. If something on the charts is really obvious and available to everyone, then that probably will not work. So now let's shift over to the S&P 500, which is my favorite chart to look at. First of all, after the 2000 recession, we triple bottomed down here, and then early 2003 we had a blistering run off the bottom, and then what happened for the next 2 years is we definitely had an uptrend with very short pullbacks, but it was more of a grinding uptrend, and then the very last part of this bull market was another parabolic move. So markets often do repeat the same patterns. It seems like that we've had a similar move up off the bottom over the past year, and now the question is, when is the market going to move into more of this sort of sideways to up grinding method that could come in this fashion here? Now, the first way we'll know about if that's going to happen is on the weekly chart. You can see the weekly chart is starting to slow down just a little bit here, although we do have a nice weekly pivot that will tell us very soon whether or not we're moving into a different slope. So if we start to follow this light blue line here, then we are probably moving into this type of pattern soon, which is good for us. Now again, on the weekly chart, anytime you see this type of move, this is a 1, 2, 3 signal here, 1, 2, and then 3 as it breaks down below there, that creates an overhead target that after we're finished finding support down here, markets will almost always go back up and retest that level. So the 1200 is definitely in the radar sights here, and slightly above that, what I'm calling the ultimate target, at least for this first move, is around 1230, which is again that 61.8% retracement of the entire bear market. So in summary, after looking at the monthly and weekly charts here, the trend is definitely still up, but what we're looking to see is whether or not we're going to move into that second phase of the bull market where things start to tone down just a little bit. And we'll find out our answer to that, I think, very shortly within the next week or two. Now, as we go down to the daily chart of the S&P 500, the first thing that'll catch your eye is the fact that we're definitely overbought. But again, markets can stay overbought for as long as they want to. We are still showing bearish divergences on the MACDs. higher highs in price, lower highs in the MACDs. We're losing momentum a little bit, although we're just crawling up the Bollinger Bands. Now, if we go back and look at the S&P 500, we haven't seen any kind of major pullback until we finally get outside the Bollinger Bands. And that's the way of the market saying that you've come a little bit too far too fast. And we just don't have that signal yet. So the market has made a very, very strong wave 3 move here, but still hasn't got to the point where it's just gotten too far ahead of itself. So it's doing a nice job of consolidating as it's going higher, which is something that we've seen really over the course of the past year. Now here's the S&P, just looking at the price action. We've seen this type of move several times before over the years, and they all essentially look the same. And the one characteristic that we can see on this is that as you go up this channel, there's usually a last parabolic move higher that finishes off at least this part of it before the next retracement comes. We may end up going much, much higher on here, again to that 1200 target, but the question now is, when are we going to get a pullback, since we really haven't seen one in a couple of weeks. So if we look at the March 2000 analog for this, we're about right at this level here, and you can see that this one was by no means finished. It was only about halfway through the move at this level here, so it had plenty of room to go, and it actually did go parabolic before it started to finally chop around a little bit and change the pitch of the move higher. And you can also see this move, which was July through October of 2007. Again, the same kind of move with a big short squeeze, and this was a Fed day short squeeze as well too, something to keep in mind. And it was by no means finished at that point, and it also went parabolic before it finally finished the move. As I go back to today's chart and look at it and say, what is this telling me? I still see that we have the same kind of deal up here where we have a lot of shorts camping out above this 1150 level, looking to play this for a double top. And based on what we've seen out of this pattern before, I think we have the possibility of making yet another parabolic move higher out of this pattern beyond the channel lines, and that'll put in a temporary top as we can drift back down over the course of the next week or two, test support again, and then higher we go forward. Now just talking about positions for a second, for March we don't have much in the way of risk at all. We have a bull put spread down here. For April on the S&P we have a couple of bull put spreads way down here, which are great, and we have one call spread up here which is taking some heat, but we've had hedges in place against this trade and may have to enter another one on Monday morning. And lastly, for the Russell 2000, we still have March positions down here, bull put spreads that are in terrific shape, nothing to do with those. We used to have a call spread here at 66, which would have been run over. However, we listened to what the market was telling us and we got out of that trade with our hedge position for essentially a break even. So here's an excellent example where active risk management prevented us from taking a loss. So that's it for this weekend's video. Thanks for watching. I hope you see you next week. Now before you go, just a couple of messages. We are consistent. We've made a monthly profit 14 of the last 16 months. We're about to go 7 in a row now. So come join us at optionslinebacker.com. And also you can join us at an upcoming live webinar as we go through the tricks and skills of the professional traders as we talk about delta neutral active risk management. That's Saturday, April 10th from 9 to 12 Eastern Time. $79 early bird rate. Go to the webinars tab on the optionslinebacker.com homepage for more information. And while you're there, don't forget your free report, the Iron Condor, your retirement answer. Just go to the free stuff tab. It's free. Just need your email address. See you next week, folks. Take care.